All right, let's bring in the fundamental side of the story and the fundamental guest that we have on the show, Anirudh Garg, who is the partner and head of research at INVasset PMS. If I've got the name right there. But Anirudh, going to start off with your assessment about FII comeback in a big way in the run-up to election. 6 months in the run-up of election, usually the trend has been that out of 4 elections that we've seen, general elections, FIIs have been the net buyers. Do you think the scenario will not be different this time around too? We will see that buying coming in, and by virtue of that, you will see banks doing extremely well. What's your assessment?
Okay, a very good morning, Nikki. Thank you for having me.
Pleasure.
Yes, you're absolutely right, Nikki, when you say that this is the time for FIIs to come in. We also believe that it has been the history. And apart from just the elections, that we believe that FIIs were laggards in terms of investing into the Indian markets, which have performed very, very well. FIIs are net buyers of quality in our terms. This is an old economy run which is focusing on value, which the FIIs tend to avoid a bit until they understand the full story. For us, I think with the government winning in the Hindi heartland and now a clear trend about 2024 emerging, FIIs have now got a surety that, okay, India is the right place to invest with the, I would say, a government which would be there for the 5 years, assuming that 2024 follows the trend, which we do believe that it will follow. And yeah, FIIs are betting bullish on it. Now, all those wonderful government companies or wonderful old economy stocks are also joining in terms of, say, like a PFC, REC, a lot of sovereign interest, a lot of FII interest we are seeing is coming in. And yes, all those banking stocks, as you mentioned, something like an HDFC Bank, something like a State Bank of India, which have been FII's favorite, something like Kotak Mahindra Bank. Yes, a lot of traction we believe that we would see in the coming 6 to 9 months in these stocks.
I also believe that you have a pretty bullish stance coming in on the PSU stocks, Hindustan Aeronautics to be in specific. Talk
Mhm.
about that theme specifically, drawing parallels within the space if we can. PSU banking index thus far, if you talk about that, has been an outperformer so far, both for Nifty as well as Bank Nifty. But how about the other PSUs in that case?
Okay, see, markets, they have a tendency to pick up something from a very, like something which is too much beaten down and then make it rise so much that it becomes exuberant. This has been a general trend in the stock markets for years now. The PSU market as such, the PSU stocks as such were very, very degraded, that to a level that a lot of I would say veteran fund investors came to a point where they said that owning PSU is a crime. We will never own PSUs in our portfolio. See, PSUs are very, very essential for the Indian economy. They are very, very good companies. Yeah, there was a management concern, which is not totally elevated to private levels now. But yes, PSUs are seeing a lot of autonomy and a lot of revamp by the government. The Modi government is very, very clear on that. And that is why PSUs are the value. There is still, the run is searching for value, and still there is so much value in the PSUs. You have something like a HPCL, BPCL, IOC operating at 3 price to earnings. Yeah. So PSUs are very, very cheap. They have a lot of value. And this run, when it makes the PSUs exuberant, would unearth a lot of value in the PSUs. And there is still, we believe, a long way to go for the PSUs in the next 2 years. All these PSUs, whether it be PFC, REC, whether it be OMCs, whether it be anything which is domestic oriented, something, the only clear trend, Nikki, is that, okay, firstly, it was CAPEX, clear that India, the anything that was related to CAPEX, whether it is railways, defense, is going good. Then it was anything which is related to Indian economy, even the interest rate sensitive, as you were talking about real estate, these would do good, autos would do good. Now it comes, the only problem that is left in the market, which we believe would be elevated, would be done away in the next 3 months, is the international consumption that is down. So all those metals, these companies which are affected by international prices are the ones that will be laggard, be it in private, be it in PSUs. Otherwise, PSUs have much more value to be unearthed than their private counterparts.
Well, point well taken, but just to play devil's advocate, you also made a point where you say in this markets, usually you will see those stocks rising at some point are really higher where they've been beat, which have been the worst hit of the lot. But that doesn't seems to be playing out for IT stocks, right? We're still trying to find the bottom of those stocks, something in the like of INVasset, something in the like of TCS. Quarter after quarter, we're looking at some signs of recovery, which clearly is not at to be seen anywhere near the surface. How are you approaching this sector? And within the sector, what do you like?
Okay, so IT, Nikki, IT is a very interesting case. Let's take it on a very micro level. We knew people who were being placed at 6 lakh rupees in Bangalore, promoted to a salary of 36 lakh rupees in just a period of 1 year during COVID. IT went into mad hiring during COVID. And when you go into such mad hiring, when you believe the point is that when you go into such mad hirings, you believe that there is a lot of scope. You sometimes overestimate things than they what really are. This is what happened in IT. They overestimated what work from home is, and then when things set in, when COVID problem was gone, they realized that okay, the hiring that we have done is not right. So I think IT is going through that 3 to 4 year of time and price correction, in which all the bad decisions that were made during COVID are now to be set right. And ultimately, when this time and price correction is over, IT would again pick up. But owing to the old economy run, where there are better opportunities elsewhere, market is not rewarding them. Market rewards relative growth, and relative growth is currently not in favor of IT.
All right. So what really you think could be working in next for the market? You think it's something in the like of Ritik, where you have stocks like HDFC Bank, RIL, ICICI Bank, TCS, INVasset and Kotak Bank now performing with the influx of FII probably that will come up in the run up to election. You think these are the stocks perhaps which could be seen more from a light of preferred bets within the large cap space?
That's a wonderful name that market has given them. Yes, we believe that these Rithik stocks that are there, which are the backbone of Indian economy, would now not underperform. The time correction that they had to go through is now almost over. Something like a Kotak Bank coming from a 6.5 price to book to a now a 3 price to book. I think the time correction is over, and now they will perform with the markets. But yes, still the primary trend is in favor of value. When we talk about value, value is most in the small caps, then in the mid caps, and then in the large caps. And then among mid, small, and large caps, value is more in the sectors that are there, something like capex, something like domestic consumption. So when you come to capex, it'll be railways, defense. When it comes to domestic consumption, it'll be autos, it'll be real estate. So yeah, all these old school boys would perform better. But yes, as you asked, the Rithik stocks, we believe that the time correction is over and that they would not underperform the broader index as such.
Right. Anirudh, last question that I have for you in that case is 7 IPOs will be hitting the primary markets. Out of that, 3 will be main board and 4 will be SME. Now, just talking and focusing about the main board IPOs, you have something in the like of DOMS Industries, which is a stationery manufacturer. You have
Absolutely,
India
yes.
Shelter Finance, and the third is Inox India, which seems also to be an interesting one. Within the 3, what you're closely eyeing and perhaps giving a suggestion for the investment?
Okay, so Nikki, I'm not a big fan of IPOs. I believe that the primary market in India is so huge, where the secondary market in India is so huge, where there are a lot of opportunities in terms of stocks that are actively traded. The main problem with IPOs is that you do not get the required subscription that you want. Yeah, when it comes for our investors, I'm more bullish on Inox.
All right, so Inox is one, but with Nifty now consolidating around that 21,000 mark, And perhaps traders now racing for the final Fed meeting of 2023 in the week ahead. What are going to be the possible triggers here on that you think you'd like to watch out for and the next big level for the market?
Okay, so I was discussing this yesterday. We believe that markets generally feeds on bad news. The only problem with market right now is short term, very short term exuberance that is happening in the market due to the BJP win. Everybody is in a very good mood, and everybody's, I believe, a little bit overestimating the short term direction of the market. This rise that happened post elections result has resulted in a little bit of euphoria, but markets have a tendency to prove me wrong in terms that if the market is on a bullish side and the 5 years trajectory is clear, they may continue. The medium term trend has no problem. The medium term trend is very bullish for India. But yeah, we believe that in the short term there can be a little bit of problem, a little bit of profit booking can come. But any dips that are there should be used for buying. Secondly, you were asking about the Fed. I think it will be a non-event. The Fed is a non-event now. The inflation is coming down. Yeah, predicting a rate cut in the first quarter, I think it's little too much. But the rate cut is coming. It is not very far. The inflation problem, I think, is behind us.
Right, that's the word coming in, inflation problem now behind us. But we're just going to leave it at that, Anirudh, and thank you so much for taking out the time to have this conversation.
Thank you, Nikki.